Let's talk some day trading psychology and two common mistakes that I see all the time. More importantly, how to avoid them. To offer a little context, if you're maybe new to the channel, I've been around coaching, guiding, mentoring traders, whatever you want to call it, since 2013. So my point here is that I've seen a lot of stuff, and I've seen a lot of stuff happen over and over again. But I also don't want to sit here and just talk in theory. I want to show you exactly what I'm talking about. So in a little bit here, I'm going to show you a couple comments that I got on YouTube videos that illustrate exactly what's going on. And both these people, it's not like they're not intelligent or stupid or anything like that. It's just the human mind. Psychology, it's a crazy, crazy place. But as traders, we want to make sure that we avoid these common mistakes and put ourselves in the best position possible. So before I get to the comments, I want to set up a little context of this first common mistake that happens from the psychology standpoint. So the way it works is we have Joe. So we have Joe here, and Joe, and assuming he's a disciplined trader, right? He has a strategy, he has a system in place. So this is not because he's just some sort of degenerate gambler that just woke up one morning and says, hey, I want to be a day trader. No. Joe, he's a trader, he's got a strategy, he's got a system. So because of that, well, part of the whole strategy and a system is before he goes into a trade, he has some sort of desired result. Now, yes, of course, the desired result is to make money. But there are other things here that are going on, and I'll get to this and fill in the blanks here in a little bit after I read that first comment. But the idea here is, as a trader, before you take a trade, you need to have some desired results other than just the simple one of, well, I want to make money. Of course, yes, we know you want to make money, but there's more to it than that. But what happens a lot is then we have the end result. And this is where things get a little tricky here, because in many cases, what happens here is it kind of goes off kilter here to what is known as confirmation bias. So let me read this comment now, and maybe you'll see exactly how you can kind of fill in all the blanks here. But it really does a great job of illustrating this very tricky situation that exists out there. So this person says, I traded too conservatively today. Made a few hundred on Tesla when I normally make about 1,000. Full disclosure on my part, I guess I don't know this for sure, but as a trader that knows what they're doing, and I'm giving this person, it sounds like they know what they're doing too. They're making this common mistake here, which is the whole idea of this. But I'm assuming they said, I traded too conservatively. Well, why were they trading conservatively? My guess is they were in a situation where, you know what? They were green on the day already. Maybe they were green on the week. Perhaps it was like a Thursday or a Friday, and they were already well in the green. So they're thinking, you know what? I'm in the green. It's been a great week. I'm going to conserve. I'm going to go a little more conservative. Why? So that they don't lose too much. So their desired result at this point, the reason for them being conservative, well, they just don't want to lose too much, which is awesome. That's great. That's fantastic money management. That's awesome risk management. That's how you do it. When you reach certain points, you need to be asking yourself as one of the desired results, I don't know. Do I want to risk giving back all my gains? Do I want to risk maybe putting myself into the red for the week when I'm already green? And if your desired result is no, I want to stay green on the day, I want to stay green on the week, on the month, on whatever, well, then the way to do that, but still trade is, well, your desire is just not to lose too much. You're going to manage risk. You're going to lower position size. But then what happens here? Well, what was the end result in this situation? It was Tesla, they said. I think that's the ticker symbol. So they traded Tesla, and what happens? They made money on Tesla. But what did they say? What happened all of a sudden? Well, all of a sudden, confirmation bias derailed them, and they're saying, oh, I traded too conservatively. I should have done more. Well, why are they saying that they should have done more? What is the bias leaning towards? The bias is leaning towards the fact that, well, they made money. So of course they should have traded more. Of course they should have not been conservative, given that the bias is that they made money on the trade, which is of course all in hindsight, right? So what is going on is this confirmation bias is saying, oh, you did it wrong. They are sitting here saying, oh, I was too conservative. I should have made thousands. But let's flip the script here a little bit. Let's say that they were wrong. Let's say they took a loss on Tesla. But because they were being conservative, yeah, it was a loss, but wasn't too much. Do you think at that point the confirmation bias would be saying, oh, I should have lost a whole lot more. Oh, I should have used my regular position size. I just should have lost. Oh, of course not. That sounds silly, right? They're going to be sitting there telling themselves, good job. Good job, Joe. You managed risk. You were wrong, but you know what? You're still green on the week. And they're going to look at it as they did everything right, which is true. They did everything right. But in this situation too, where they made money, they also did everything right. But of course, in their own mind, because of confirmation bias, those little voices are going to try to lead them down that common mistake of somehow believing that they screwed up the trade in some way, which is not the case at all. They executed it flawlessly. I mean, they executed it like a professional would. Got the desired result, lowered position size to manage risk. They were right. So sure, they still made money. Not as much money as, of course, in hindsight, they wish they would have, but they did everything right. So don't fall into this common mistake where you think that you did something wrong, but the only reason you think you did something wrong is because you have bias of hindsight. And once again, in this situation, the bias was the fact, well, they knew they made money. So, I should have done more. Why was I so Because, again, flip it around. Oh man, I should have lost so much more money. No, nobody's ever going to say that. So that's the first thing that happens all the time. Now let's get to this next comment. And this is another very common trader psychology thing that I see, and it needs to be avoided. So this person says, happens to me all the time. They drive the market down until I sell, and then bam, to the moon. SOB. To offer up a little context here on this one, this was a video where I posted where a stock went down. I had to just exit out, take a loss on the position, and then of course, as I exit out, it goes back in my favor. But it was totally fine. Now, as far as this is concerned, of course, the confirmation bias is, dude, you should have, why did you get out? You were right. Well, because I need to honor my rules, and my desired result going in was to, manage my risk, honor the stop loss. And that happens as traders. But on that particular video, they're saying, oh, it happens all the time. So the first little learning lesson here is that if something happens all the time that is not good, then that tells you there's a problem with your strategy, okay? Hopefully, I would like to think a lot of this stuff is obvious, but do you see the problem with this person right now? Do you see why it is not obvious to them on why stuff happens all the time and why it keeps happening all the time? Well, it keeps happening all the time because they're not correcting it. But do you see why they're not correcting it? One word in there. The reason why it keeps happening is because they're not correcting it. The reason why they're not correcting it is because of this word right here. They, as in somebody else. They are driving the price down. So I'm guessing if I press this person, they would say the algorithms, the market makers, the who knows what, somebody's on Twitter. They're driving the market down, and then as soon as they sell, the market goes in their favor. But don't fall for that mind trap. That's a common mistake to want to just blame everybody else. See it all the time. I still struggle with it. Not necessarily in trading anymore, but just in life. Something happens and it's like, oh, well, and you want to default to somebody else. And that's just human psychology, right? You want to feel good about yourself. You have an ego. We all have egos, and our ego is designed to help us feel good. So we want to defend that at all costs. And in some situations, defending the ego means, well, let's just blame an external source. But here, that's not going to get you anywhere. So my friend, the reason why this very bad thing that should not be happening all the time is happening to you all the time is because, you're not fixing it. And you're not fixing it because you're blaming the wrong source. So how do you fix this one? Very, very simple. You get out something called a mirror. And you blame the person in the mirror. It's your fault. But think about that. That's awesome. If you were the problem, guess who the solution is? You. That's the most freeing thing available out there. Your mentality right now it's like bondage. It's, there's nothing I can do. They, them, external force. But if you look in the mirror, say, all right, yeah, no, it is me. I'm the reason why that keeps happening. No, it's going to happen every now and then, as it happened to me. There's no such thing as a perfect system. But if it's literally happening all the time or the majority of the time, then you know what? It is you. And you got to figure it out and you got to get it fixed. But you know what? At least you can offer the fix. And then circling back here, because the two things do work together. In this situation, how do you avoid that? Well, you also need to be looking in the mirror. But the way you look in the mirror and the question you need to ask yourself is this right here. RTR. Remember the reason. Remember the reason in regards to what? Remember the reason of your actual desired result. So in this person's example, if they look in the mirror and remember the reason that, well, yeah, I could have made more money on Tesla. Man, that would have been nice to make more money on Tesla. But looking in the mirror and remembering the reason that the reason they went conservative was to manage risk, they're going to be able to say, but you know what? I did it the right way because my reason was not to make a huge score in Tesla. The reason was, yeah, I'll try to add some more profits to my day or my week, but I don't want to give anything back. I want to maintain my gains. I want to at least stay green over whatever time period they're concerned about. So that's how you get over this confirmation biases. You also got to look in that mirror and ask yourself, RTR, remember the reason. What was your actual reason for getting into a trade and what was that desired result? And that's going to help you overcome the whole mentality of, oh, I should have done this or I could have done that. And then the next trade, you're going to think back to this flawed premise and you're going to put in way too much size. Then you are going to ultimately end up, ruining your day or ruining your week or ruining your month or who knows. So you got to be very careful of it. And once again, just to really reiterate, if you're suffering from or have suffered from either of these, they're very common. They're two of the most common trader psychology things I see happen over and over again. So you're not alone. You're not too stupid. It's nothing like that. It's just you're a human being and that's how the mind works. So hopefully this was helpful. Before I go though, if you did enjoy the video and if you would like for me to make more like these, quick, easy way to communicate that to me, just hit that like button. Also down in the comment section, comments, questions, suggestions. I would love to hear it from you. If you've ever watched any of my past videos, then you know that I will reply to the comments. I read them all and I will reply. I kind of pride myself in that. So yeah, leave anything down below. And then also if you enjoy the channel as a whole, so check it out. There's lots of other types of videos. Hopefully you decide to hit that subscribe button. I'd love to have you as part of the channel. But thanks for hanging out. Be aware of these two very, very common and problematic mistakes that people make in regards to the trader psychology. And that way you can improve and avoid them in their entirety. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.